didn't like that sell-off on Monday, if that really kind of woke you up and you didn't kind of like that action, so to speak, use this as an opportunity to take a little bit of money off the table. Here's what you need to know before the bell this morning. Last week, obviously a very volatile week. Monday, markets were down 3% on Monday. And of course, that was the big yen carry trade blow up, volatility shock. Everybody was just kind of really taken off guard. As we talked about last week, though we're still really just in this correction, this 5 to 10% correction that we talked about in June, July, just still in that process. Nothing really overly dramatic about it other than that sell-off on Monday. That really kind of just got people by surprise. It was just a big sell-off and a big jump in volatility and really, kind of just woke up slumbering giants, so to speak. But we did see a lot of sell-off. By the end of the week, though, we completely reversed that sell-off. So that whole sell-off on Monday was recovered by Friday. Again, still oversold here a bit and still on a sell signal. So again, that's going to suppress kind of upside movement in the markets, at least near term. And as we kind of talked about, last week several times, is that, be sure and use this rally. Again, markets are looking to be up a little bit more this morning. Kind of a muted open, to say the least. Dow's up about 40 points right now in futures. But use this rally to potentially reduce some risk, rebalance your portfolio. If you didn't like that sell-off on Monday, if that really kind of woke you up and you didn't kind of like that action, so to speak, use this as an opportunity to take a little bit of money off the table. Again, just if you raise some cash here, that doesn't mean sell everything, but if you just raise a little bit of cash, add to your fixed income, whatever, that's going to give you a little bit better opportunity to just kind of weather whatever happens next. Again, there's some pathways here that we can kind of see this market take. First of all, we've got a lot of resistance now coming up right here at the 50 and the 20-day moving average where that's starting to cross. So that's going to provide a pretty strong resistance level for the market. So if the market can rally to that, I would expect a bit of a retracement following that. Just, again, we have a lot of these trap longs. They're in the markets. They're looking for an exit. And so if we get to a key resistance level, that's going to certainly provide, kind of that potential area to start selling into a bit for the markets, particularly with the 20-day moving average now moving down. Right now, we did break above the 100-day moving average on Friday. So again, that took out one level of resistance, but that was just the initial test. So we've got to stay above that for a couple of days. So I think right now, the most important resistance level, just kind of keep a watch on it, is that crossover between the 50 and 200. That's going to put some downward pressure on the markets. But again, kind of watch this buy signal. If we can get that sell signal to revert back to a buy here in the next few days, that'll start providing a little bit of support for the market, start to bring investors back in. But again, I think the most likely, kind of opportunity here is that we get a bit of a rally. The market retest kind of maybe a rising bottom here, somewhere here, set a higher low, and then potentially rally from there. The bigger risk, of course, is a pullback to the 200-day moving average. That is rising. So again, we see a bit of a pullback to that support level, certainly not outside the realm of possibility either. And again, that could kind of take us into, mid-September-ish, maybe even early October. We could just kind of chop around here for a bit, with the markets, here for the next month or so. Again, these correctional processes can take a little bit of time, and we can kind of work through that process again. But what we're looking for here is ultimately for this market to kind of stabilize after that big sell-off that we saw last week. I wouldn't be surprised to see that. We got people fairly negative across the board. Lots of articles out right now talking about the death of AI and the mega cap stocks. Don't buy into a lot of that right now because, again, those stocks are driven by the passive indexing effect. So if we get people invested back into the markets, that's going to drive those stocks. And particularly we're seeing hedge funds now that had degrossed a lot in those stocks early on in the last couple of weeks, now buying back into those fairly heavily. The bullish side of this is we crack above this resistance level and we can go back to all-time highs. So again, there's kind of two pathways here to watch, but I think the most likely here, we get a rally to resistance, a failure there, retest of lows, and then that's going to be your better buying opportunity. And that's just going to take some time to get there. That's what you need to know before the bell this morning.